Hello, everyone. Welcome back to the Switch Markets community. I'm Shane Vernier, and today we're going to talk about the Fed, the jobs market, and we're also going to cover some of your key markets as well. There's a lot going on right now as far as tariff talk. There's all sorts of talk about the next Fed chief. We're talking about many, many different subjects there in Washington, D.C., political scandals, you name it, it's going on right now. So I want to welcome everybody back. I think that it's going to be an interesting session. We've got a lot to go over, a lot to talk about. I've got a few markets that we need to start off with. Some great questions there from Gordon Williams. Gordon Williams there. I'm in the live chat talking about the Euro Yen and the Euro USD long on the 15-minute chart. We'll go ahead and pull those up, give you some macro analysis maybe that can complement your short-term analysis. But as far as what we're going to be doing today, is we're going to take a look at all things markets. If there's a market that you would like to look at, be sure to put it in the live chat, and I'll go ahead and pull it up on the charts and see if we can get a basic idea or a general idea of what to expect as we roll into really what has been a slow and absolutely a slow news week with regards to regular economic events. Now, the news cycle is hot. I mean, we see breaking news every 5 minutes. It seems like I'm reading another story. You've got Russia, U.S., a lot of saber rattling there. You've got tariffs, the EU. There was an emergency trip from Switzerland. Switzerland president decided to load up the business minister and fly to D.C. this morning to try to get a deal done. We talked a lot about that. But believe me, these tariffs, anytime there's a big tariff going in, there's going to be a deal-making session. So, I don't even really know where to begin with the news cycle. So we're going to dive in and cover some of these big topics, but I do want to get right out to price action first. So if there's any markets that you guys would like to look at, go ahead and fire away. It's good to see everybody back. Okello, good to see Okello. David, hello. Great Britain pound USD doesn't know what to do with itself since Friday. Well, I mean, you got the BOE coming up, David. And the BOE is going to dictate all kinds of policy. And also, there is the one thing to remember, there is a UK-US trade deal in place. Now, there isn't quite one yet with the EU. Now, they said there was, but there's still some big-time tariffs on some of those EU members that we're trying to get rectified right now. So the deal-making process is still very much in progress for the EU and the United States. But that Great Britain pound, we're anticipating a rate cut on Thursday from the BOE. We're not necessarily sure what exactly the verbiage is going to be surrounding that, and we know the U.S. and UK have a deal in place already. Boy, I mean, we had a pretty good trade in that cable. Where does it go from here? Where does anything go from here? Really hard to say. Let me see Ahmed. Hello, Shane. Hope you're having a good day. I'm having a pretty good day, Ahmed. I feel good. Ready to work. Lita, always a pleasure, Lita. Good to see you. Bobby Bob. Hey, Coach Shane. Howdy. Howdy, Bobby. Let me see. Great Britain pound, Japanese yen, and WTI. Okay, so we've got all sorts of different markets that we're going to hit. Let's start out. Let's go ahead and take a look at some of these questions right off the bat here and see if we can get right out to price action and maybe spot a trade or two. Okay, right here, Euro Yen. This is one that was brought up from Gordon. Gordon says, okay, 15-minute chart. Will this thing keep going? Well, I like to start off with from the top to the bottom. Why would I do that if I was going to look at a 15-minute chart? Because I want to know the market direction, and more importantly, I want to know where the key levels are. And right now I'm looking at a monthly here, Euro Yen. I don't really see any big-time key levels. Maybe we could say 172 potentially could be top-side resistance, but something like that, I see that as being saturated, so I'm not too worried about it. Okay, so if we're not going to be able to find any real key levels here, and in my opinion, there are not going to be any key levels, our bias should be to the top side. Potentially, there's really a beautiful pullback right there, nice big negative week, and now we're moving higher. So the question is, on a 15-minute chart, are we going to move higher? I'd say, well, I'm going to walk it right down to my daily. Now, this is why I do multiple time frame analysis. Very, very important. I want to know where my key levels are because they will impact short-term price action. I've got a key level right there. That's a daily Bollinger midpoint. Where is that level at exactly? Right around 171 even. Beware. That's potentially top-side resistance. And then what do you have up here? You have a moving average, which is right up at 171.37. So this zone right up in here, if I was going to go right down to a 15-minute chart, and we're going to here in just a second, I would be cognizant of potentially running into some sellers in that area. We see Andrea. Good to see you. Andrea, welcome. If you have any markets you'd like to look at, be sure to throw them in the live chat, and we'll go ahead and see what we can do. But right here, nice compression zone right there. And I think that if we go down to that 15-minute chart, and it really is, it's what everybody wants to do is trade these intraday time frames. Listen, I do too. But I always make sure that I know my macro levels. I know my key levels because you can easily stumble into a trap. And what I mean is you could get into an area that potentially is going to be big-time resistance, maybe from a key level, maybe from a Fibonacci, a moving average, whatever. And the momentum you'll find can leave the market in a hurry at those levels. Remember, all price action is, it's the dialogue between buyers and sellers. And if we can identify where the buyers and sellers potentially could be, we can avoid maybe a little bit of strife and maybe save us a couple of bucks. So right here, if I'm looking at this, I believe your question came out right around 9:30 my time or so. So essentially, Gordon, your question was, are we going to move higher on the 15-minute chart from right around this area right in here? We look back, you get on our way back machine, we look back about an hour and a half or so, and what do you have? You have flat trade. Why would we see the market be flattening out? Our key number, 171. I would be very careful buying into this market right now. If you wanted to play this on an intraday time frame, I'm a big fan of the 4-hour chart. I really think that the 4-hour on the Forex gives you an opportunity to succeed with some pretty good entries and some pretty good exits. This right here is probably what my game plan would look like. Now remember, that's only as long as that upper extreme sort of is the high watermark for the day. But you get this pullback. We've got a moving average right down there, 13-period EMA on a 4-hour chart down at 170.59, 38% at 170.49. Boy, I love that bid a heck of a lot better than where we're bidding right now. 170.50-ish, 170.55, something like that. Yeah, I hope that helps, Gordon. Dave, good to see you. Dave F19, all right. Okay, so that's a good look at the euro yen, and the other question was, I believe it was the euro. Let's see, we have two that want to see the Great Britain pound. Yeah, we can go ahead and do that. Euro USD long. Euro USD is fantastic to us. This has been a pretty good one. Now take a look at this 4 hours. Now this is a 4-hour chart. You got the big move right there with the ECB that came through the board somewhere right around August 1st, so that would have been Friday. So what is that? Essentially right before NFP, I guess you'd say. So I believe the ECB was right back in here somewhere. In any case, this was sort of the big move. And what have we had really to begin this week? A lot of compression. Nice big move. Now we're flatlining, and we're not really getting much of anywhere. So is this bullish or bearish? Well, I mean, there's definitely a lid on the market. Why do you guys think there's a lid on the short-term market? 116. 116. 116, 116. So right now, that's going to be a big-time key level for me. So if I was looking at this, you'd say, okay, Shane, are we going to go higher or lower? I'd say, wow, we got to be very, very careful with that 116 zone. If we do break above that area, that key level, that area of natural resistance, then we could buy in with a lot of confidence. But you'll notice if we go down to the 15-minute chart, you really see something very similar to what we just sort of looked at. Nice compression right here, right in front of this 116 zone. In my view, that's probably where the sellers are coming from. But one last thing I really want to stress here, guys, and it's a question of volume and order flow. Now, I'm not going to sit here and get into a big-time lecture on volume and order flow on the Forex. I'm not going to call shenanigans on Forex volumes, but I want everybody to understand that the volumes that were reported on Forex charts and in the Forex pairs, those are directly from liquidity providers. Okay, those are self-reported by liquidity providers. They're not exchange-based. Exchange-based products like futures give you an accurate depiction of what volume is. In a futures contract, I can sit here and say, yeah, I got a pretty good idea whether the volume is really decreasing at a rapid pace or increasing at a rapid pace. Now, I'm not saying that these brokers are necessarily lying about it. I'm just saying that the data that they're privy to may not be 100% accurate. Euro USD 15-minute, you can see the big time stuff right here, the big time volume, and the volume's really dropping off towards late in the day. So if we're going to say, okay, Shane, is the market going to go up or down from here? I have no idea. And the reason why I don't have any idea is the volume's drawn up. The market's sort of getting a little bit thinner than it has been. And that means what? It typically means you're going to see a flatline market, maybe a rotational market through the rest of the day. So let's trade rotational strategies. We can't really do that either. And the reason why is if you get a big influx of volume quickly, it can really knock price out of whack and sort of be an artificial move. So be very careful if you're trading these pairs right now into the U.S. close. I'm not saying you can't do it. Just be aware of your big round numbers. Be aware of your keys, and you'll be just fine. That's what I would say with regards to those two pairs. So let's see. Yes, sir. Good to see you. Hey, I'm late. That's okay. Everybody can be late except me. If I'm late, then I get fired. So I'm the guy that's got to be on time. But you guys definitely watch this thing on demand anytime that you'd like. It looks to me like we've got some of our technical issues sort of mopped up and cleaned up from last week, which is good. It's good to see. I'm glad to see that some of my griping to some of our server providers borne a little bit of fruit. So we're looking pretty good. But if we do have those technical glitches return, I'll do my best to fix those ASAP as quick as I can. So let me see. Ahmed's got a question. Shane, after the news came out, I thought it might mean a pump in gold and Bitcoin, but quite the opposite happened in crypto. Crypto's sort of in rotation right now. And a lot of that has to do with our anticipation on what's going to happen with interest rates, what's going to happen potentially with our markets as a whole, and we're going to talk about that as well. Okay, we got a couple more markets that I want to cover here, and then we'll get into our discussion for today. Let me see, Bobby Bob, Great Britain pound, yen, and WTI, and then we also had a question about the Great Britain pound, U.S. dollar. Well, I'm a big fan of the pound dollar. We had a fantastic trade that came across the board that set up for us right after that NFP, and it was a pretty good one. Let's go ahead and take a look at the price action on our MT5 platform. Just a basic Fibonacci retracement sequence. This is one that we looked at yesterday, really from this spike low down here up to this spike high pullback, and then we failed right at 38%. So if we failed at 38%, what does that mean? It means that we're still very bullish here for the Great Britain pound USD. Now, we're anticipating a rate cut on Thursday. A rate cut on Thursday. We've got to be aware that that could be potentially a bearish market driver for the Great Britain pound USD. What would that mean? It means that that pound would lose a little market share against the dollar. Why? Because the BOE may be going dovish, and the United States dollar may not be going dovish as quickly. But we're going to break that down because our expectations for this pound dollar have really changed over the past 2 days since the big jobs report came out, and we got to dig into that because there's some good stuff in there. But right here, nice big pullback, and then we bounced. What are we up? About 150, 160 pips from that entry. Pretty darn good zone. So if I was trading the Great Britain pound USD, I still have a bullish bias. I'm not really too scared of buying here. But we do have some other trades that we could look at potentially being opportunities to go short or maybe some resistance levels. On the daily chart, you can see we've got a nice big sell-off here, and then we just had an absolutely beautiful strike. I mean, that was perfect. Really went down to that macro level and have bounced. That's a great trade, so I'm confident you guys got some. Of you guys got some of those. Who knows? Let me see. Andrew Lockwood in the house. Hi there. Long time no see. Looking good. Well, thank you, Andrew. It's good to see you, too. It's been a long, long time, if that is indeed the powerful Andrew Lockwood. Always good to see. Always a pleasure, guys. But you got a nice bounce there. You sort of got a nice big wave here, a nice big, I would call it a nice retracement into a significant sell-off. But our macro level stood tall. It was fantastic. Got a great little bid there. And now what are we looking at doing? Well, I mean, there's a couple of things we could do. Theoretically, we could look to sell. We could sell a retracement back into this sell-off if we wanted to. I would hold off on that. I would almost defer to a different type of strategy if I was going to make a play on that Great Britain pound USD going into that big-time session that we're going to have Thursday where you get that rate cut potentially out of the BOE and maybe some big-time action in the sterling. So what could we do? Well, I always like to have several different approaches to a market. Now, if you head inside the How to Trade trading room, you've got all sorts of different strategies, everything from the pendulum to the trend rider. We've got strategies that are left over. My counterpunch strategy has been up there for 3 or 4 years. We've also got the How to Trade channel on YouTube, and that is, we put out a lot of strategies over the past year. One of my favorites is the 920 EMA crossover. And you can see right here on gold, we're going to cover gold in a second because we do have a buy potentially setting up and maybe positioning us just perfectly to rally up to that 3,500 level again. But for right this minute, let's take a look at that Great Britain pound USD on the 1-minute chart now, or excuse me, on the daily chart. Now, I love this on the daily because it really gives you an opportunity to take a true swing trading approach. You don't have to get in and out on 15-minute time frames. You can get in on the daily time frames, dial your leverage down a little bit, and take a position potentially to get a runner going into a big-time event. So do we have anything here? Not really. Not really. We had a sell signal right back here, our purple bars. Remember, this is our coded 920. There's our crossover. There's your sell. But what I like that's really happening here is we're right on the cusp. I mean, we've got 29.94 on our RSI. Now, our RSI is our confirmation tool. I don't particularly think you need it on a daily time frame, but you've got an opportunity potentially to set up sort of a high-impact bid here. But what has to happen? You're going to have to get the 9 to cross over the 20 with RSI confirmation on the daily time frame. I like that. I just don't think we're going to get that in front of the BOE. So what do we have to do? We have to dial things down. We got to keep going down in granularity on our charts and see if we can't find us a buy. There's your 4-hour buy. Simple as day. RSI right down there is an oversold territory. That's going to tell us to potentially take a bid, right? So how would we design this trade? Relatively straightforward. You're going to put this stop loss down beneath the swing low. Nice big rally right there back on the 1st of August, and then there's your bid. There's your crossover, and there's your bid. So right now, the market is flat. And this is what I call a rotational market, a flat market. We've moved sideways since the big fireworks of last week. What are we going to do now? Well, potentially you have a bid right there on the 4-hour chart. You could try to take a position like this. You could even do something like this, which is extra tight, right beneath that swing low, and just sort of try to play, maybe get in on a big runner right ahead of the BOE. It really just depends on what your goals are for the trade. Now, if you're a smart money concept trader or you believe in market structure, I wouldn't say that I'm a big market structure trader, but I wouldn't ignore that order block right there. There you have it. So you're moving sideways. Potentially, you've got an opportunity maybe to get a runner up to about 130, 350. Is that a high-risk trade? Well, I mean, it doesn't have to be. I recommend 1 to 3% on a given trade. You know my motto, I will look the other way if you have to wager 5% of your trading account on a trade. I understand for a lot of retail traders, you don't have much capital to work with, and if you're going to make any money at all, you sort of are relegated to taking those bigger risks. And also if you're trading prop. Remember, one of the big beauties of trading prop is that it's their money. Now, I'm not saying just pay prop fees willy-nilly and burn through your accounts and spend a ton of money just trying to get funded on a prop firm. But what I am saying is once you are funded and you've built up a little bit of capital, maybe a little bit of time, and if you want to take a shot at a trade with a little bit greater leverage, I say as long as you're doing it with house money, I'll sign off on it. That's my motto. Eventually, you got to take a shot, and if you're going to take a shot, make sure that you're sure about what you're doing and that typically you're not going to lose your car, your house, your significant other, or any of those things. That's what I would say. In any case, though, I do like that trade right there. So stop loss, to be honest with you, if I had my stop loss, I'd be down here. I'd put it beneath the 50 handle. So probably 132.45-ish, something like that. You got a nice bid right there. I would say, what was your open? 132.99, somewhere right around 133. So, I mean, the trade really still is there for you. And if you wanted to go ahead and just take that shot for, 59 or 60 pips, you got a shot right there. You got a chance. Interesting trade, guys. Interesting trade on the Great Britain Pound USD. Let's see. I got way behind on the live messages, so good to see you there. It is, old boy. Well, good to see you, Andrew. Welcome. Steve Francis, will the rate reduction not already be factored into the market with the Great Britain Pound USD? Steve, it's a great question, and it really is. It's the old chicken or the egg. Does the market move because of the market moving event, or does the anticipation of that event prompt the move? Most of the analysts, I won't say most of us because I'm not an economist really, I'm a trader. Most analysts believe that you're going to get that quarter-point rate cut. And the idea is that it's going to put more pressure on the United States Fed to cut their rates. So if that is sort of the chain reaction, Steve, if that's how this whole thing's going to work, then you could say that probably it is priced in. But what we're looking for is forward guidance. And we're looking for I always hate to say this because I don't like talking back to central bankers because they really are fairly wealthy and they can do a lot of things to us that most people can't. Some good, some bad. But it's all about if somebody says something stupid. And if you get the BOE, if somebody says something that's a surprise, or maybe that vote, we're anticipating an 8-1 vote. If we get up maybe more of a mixed vote there, maybe the governors start butting heads. That's what we're waiting for in the Fed. For the first time in a long time, we had dissension in the Fed for an interest rate decision last time out. So that's what we're looking for. I think that those peripheral things could be the things that really move the market. So we're watching that closely. I think the Great Britain Pound USD, though, it was one of our picks to click in the Switch Markets newsletter. Check that one out. We covered the Great Britain Pound USD, the USD Swissy, and then also the Swissy, I believe it was a Swissy Euro. We had a trade idea out on that as well, or Great Britain Pound Swissy, excuse me. Take a look at those three pairs. Those came out in our Switch Markets pick to click, and I go through and sort of break down the technicals for all those things. But I do like this one, this 920 right here, 4-hour chart. It's a low impact, sort of a low risk trade. May not be a bad way to get involved here for the next 36 hours, something like that, if you're interested in taking one of those types of trades. Okay, let's see. Hurst Horns, no risk, but it does have to be structured risk. Yeah, I mean, I've gone down that road, where you show up and you throw a big wad of cash down, and it can be a real challenge to come back from one of those losses. That's why I don't want to see anybody get overextended. Be smart. Most folks, most big institutional traders, or most sort of higher net worth traders, they won't go higher than 0.5%. They believe that that's as much risk as they want to take on a trade, and that's great. But I understand that if you have a $1,000 account or a $2,000 account, can you really sit there and risk $50 on a trade and sort of and expect to make anything out of it? And the answer is no. So I feel you there. I feel where you're coming from there. But once we get up into the 7 and the 10%, you can get knocked out of the game so fast. And I want everybody here trading. I don't care if you're trading with Switch or you're trading with Prop or your other broker. The idea is to make you guys really, really sound managing your risk. And what that means is not taking absolutely huge positions on something this is an inherently risky trade. There's no two ways about it. You got the BOE coming. You've got Trump getting ready to say anything at any given time. That's going to all influence the dollar. I mean, we've got mass firings here in the United States at the governmental level. Wait till you see some of these headlines we're going to look at. Interesting type of a thing going on here. And it really all kicked off with Epstein, if you guys remember that. Well, all right, let's get to it. No risk, no reward, but it doesn't need to be structured. Absolutely, Hurst. If you don't have structured risk, you're in big trouble. Hey, listen, I like gambling as much as anybody else, but I save my gambling for Vegas. We hop on the flight and go down to Vegas and throw the dice. We don't do that in the markets, because if you start gambling in the markets, I'm not saying that you can't run your account way up. I'm not saying that you can't. I'm just saying that these markets never close, and you can trade at any given time. Don't go in there like a gunslinger with haphazard risk. I mean, there's folks have lost millions doing that. You got to be structured, cool, and composed. Look for, know what you want before you get in there, and then take it. Let me see. T. Marina, Shane, what are some good reasons to have various brokers, if any, other than if brokers go belly up, such to have one trading system per trading account platform? I like to have multiple accounts with multiple brokers. You can also have multiple accounts with the same broker. So the reason why is typically you'll have accounts that are position accounts. You'll have Forex accounts. You'll have futures accounts. You'll have scalping accounts in the futures markets that I like. And the reason why you almost need multiple accounts if you're going to scalp and take positions is that a lot of times you take positions against yourself. Nothing wrong with that. There's nothing wrong with scalping against a broader position, because the trades are completely different. So I think that's the biggest advantage, is just strategic flexibility. T. If you're in there and you got different goals for different types of trades, I would highly recommend that. And another thing is, if you're a futures trader and a Forex trader, you're probably going to have different brokers there. If you're a stock trader, you may find XYZ platform is much more conducive to you being a better stock trader. I mean, I know a lot of people love the retail platforms here in the United States just because they're easy. You pull up your phone, you sit there, and you pull the trigger on stock trades all day. Well, if you have enough money, you can, or otherwise you'd be a pattern day trader. But I don't highly recommend anything, really. I'm not going to give you guys money advice, but what I will say is that, yeah, there is a lot of reasons to have multiple accounts, and one of the reasons is strategic flexibility. 100% is being able to do whatever you want, whenever you want. And there is a bit of counterparty risk too involved with brokers. But I tell you what, we've seen a pretty streamlined environment for a long time now. So that's one of the risks no one talks about, is counterparty. Maybe we'll do a video on counterparty risk. It can be a big deal, right? When I first started trading, that was my introduction into the markets. We watched our broker go, we're out of business. And I go, oh, really? Stand in line and hope you get your money back. Yeah, it's a good reason for diversifications, flexibility, and then also counterparty risk. That's what I would say. All right, guys, let's go ahead and get on with it. Welcome to the Switch Markets community. If you guys are interested in trading any of these ideas or really any market at all, head on over to Switch. Thousands of markets, 0% commissions, tight spreads. You can go ahead and get down on pretty much anything there. Check out the game at Switch Markets and bring your ambition into focus with your favorite Forex pairs, CFDs. There's a lot over there. Everything from Bitcoin to NVIDIA. You can trade anything there. Let's see. T. Maria, yes, please do a video on counterparty risk. We have a brand new video that dropped today over on How to Trade. It's How to Trade Comms YouTube, and that is going to be improving your orb entries. It was a video I've said I was going to make for a long time, but the opening range breakout strategy, I give you 2 ways on how you can improve your entries and really flip your risk versus reward. Different type of strategy than getting in on that breakout. It's more of a retracement from your range. Still, though, I like it. I think it's pretty. I think it's pretty good. It can get you up and running relatively quickly with some risk versus rewards that are more traditional, as opposed to my traditional 1-to-1 stuff. Yeah, see if you like it. Who knows? All right, Monday it was quiet. Today was ISM PMI and S&P Global Services PMI. They're two peripheral metrics. Now, before we get into these numbers, the biggest thing I'm going to say is this. We're not economists, we're traders. And if you don't understand these numbers, and I look at them and I say, I can look at the trends, I can look at the previous release and the expectations, and I can sit here and say, okay, what exactly do these numbers mean? All right, we'll give it a shot, but you don't need to know what they mean. You do not need to know what these numbers mean. So don't get intimidated by them. These are what I call academic numbers. And there's an old saying, academics can't trade. I think that's changed a little bit. There's a lot of folks that are highly educated that are doing pretty well in the electronic markets. But in the old pit days, it was the old saying, academics can't trade. So I take these numbers with a grain of salt. These are more for the economists, the folks on CNBC, the folks that are trying to write books for other people that write books. I don't know if that makes any sense. Let me see. T. Marina, Shane, did you do a vid on Alga Builder? Not sure. No, not yet. Haven't got to Alga Builder. That one's probably going to be coming out relatively soon, though. We did one on Pine Connector. Let me see. Tina Jing, good to see you. Tina, yeah, it sounds interesting. I will be interested, too. 33 works now, isn't it? Yeah, pretty much. 33 weeks, it could be 33. I thought it was 32, but I might have lost a week. Who knows? Let me see. One last. Hurst Horns. My game plan is having my main personal brokerage with Ninja Trader, and then I try to accumulate as many prop accounts with good firms as possible and use feeder accounts for my main brokerage. I like it, Hurst. I've done business probably with a lot of the folks that you've done business with. I don't have any problem at all with your broker there. Actually go way back with them. So, yeah, no problem there. Let me hedge. Let me hedge risk versus reward. Let me see. Let me hedge risk and spread around my risk and diversify where my trading capital is. If one company goes down, that's not the end of the world. Yeah, I mean, that really is. It's smart. Tina Jing weeks. I think you're right, Tina. 33 weeks. Thanks. Good for pointing that out. I wish I had that a half hour ago. Now I sort of look like an idiot. That's okay, though. We'll get that fixed and tidied up. Let me see. Yes, sir. So the Fibonacci retracement on the orb would be the same regardless of what time frame you're on. Yeah. You're going to build your Fibonacci's based on the range of the orb. So you're going to get a move. You're going to get a breakout outside of the opening range. And then you're going to work your Fibonacci's either from the top of that range to the bottom of the move or from the bottom of the range to the top of the move. And then you're playing pullbacks from the Fibonacci levels inside of the orb. It's on the video. I sort of ran long with it, but it's I tell you what, I've been looking real hard at those as being a good strategy because during the summer months, we haven't got really many breakout runners at all in the orb, but you can still swing that risk versus reward in your favor and play the center of that orb and almost view that as a big time support and resistance zone, pair it with some technicals, give yourself an opportunity to get after it. Hey, Amy, good to see you. Good morning, good afternoon, good evening, wherever you may be. All right, guys, here we go. Let's see, ISM PMI and S&P Global Services PMI. Remember, Tuesday, Wednesday, Thursday, psychology. It's all systems go. We're here to hit our weekly P&L goal and aggressively trade our plan. That's what we want to do. We want to focus on our execution. If our strategy says trade it, we're going to trade it. So we are aggressive this middle 72 hours of the week. Mondays for game planning and getting momentum going. Fridays for preserving momentum. Tuesday, Wednesday, Thursday are for making money. That's it. That's pretty much how I've looked at the markets for a long time. And it helps me psychologically stay on track. For today, news of the day. Here's our academic numbers. S&P Global Composite PMI, 55.1, up just a little bit from 54.6. Services PMI, 55.7. And then the ISM non-manufacturing PMI is at 50. The ISM non-manufacturing prices paid is at 69.9. What do all these numbers mean? They're academic numbers. Now, I don't have any problem with anybody working over at the S&P Global Composite firm or the S&P Global firm or the ISM. It's like the Institute of Supply Management or something like that. I don't have any problem with anybody that's over there working. Got a lot of respect for what you guys did here. The problem is nobody really knows what any of that means, including me. I believe over 50 is going to be a bullish type of an indicator for the U.S. dollar. But the biggest thing to remember, anytime you're given a table of numbers like this, remember, don't let it intimidate you. Don't sit there and go, geez, I don't know what 55.1 means. Only the folks that actually built these numbers know what it means. I mean, believe me, there's economists out there that are going to say, well, actually, this is a great leading indicator, and it may or may not be. I haven't seen really any evidence that these are leading indicators of anything. I really haven't, and I've been looking at them for quite some time, quite a few years. For me, the biggest thing is always our relative analysis. So anytime you're asked to evaluate a set of numbers, All that matters is the number with respect to what we expect and the previous release. This S&P Global Services PMI for July is up. It's a little bit better than we expected, and it's up big month over month. So that would be a positive. That would be a positive indicator for the services industry. That sort of suggests that consumption is on, sort of in line. Now, if we come back down here to the non-manufacturing PMI for July, 50.1. Worse than expected and worse than the previous release. So the ISM non-manufacturing PMI is sort of different than the S&P Global Services PMI, which means what? What do you think the non-manufacturing PMI has to do with the service industry? These two companies, these two think tanks saw different things. Now, they're both fairly positive, but they got a different spin on the data. That's why I'm not going to sit around and argue with academics about their numbers. I'm really not. If you guys love them, if you want to learn more about these things, feel free to go to school and get that background in economics. I got a degree in finance, financial management, and for me, the economics, the micro and macro stuff were just some foundational tenets, and I see these numbers as sort of being peripheral at best. I'll tell you the truth. Why are we covering them? Because it's important. I heard people talking today on X. They were going off about these PMI numbers. Don't get carried away with these. Believe me, the markets aren't. Take a look at the markets. Nothing today. You're chop city. The reason why you're chop city is because there's bigger news out there. The headlines are ruling everything right now. They're ruling everything. Look at this. Treasury Secretary Bessent does not want to be the Fed chair. Why even put that out there? Why even ask him? Because they're already turning the page from Jerome Powell. This is just another way that the administration is ramping up the heat on Jay Powell. Bottom line, look at this. Trump says JP Morgan Chase and Bank of America rejected him as a customer. That's more pressure on the banking industry. Believe me, JP Morgan and Chase and the Bank of America, these folks know people on that FOMC. They're a tightly knit community. I won't say that the Trump administration's going to war with the bankers, but they're putting them on notice. He wants rate cuts. They want rate cuts, and they want them soon. So are they going to get them? September, 87% chance that you're going to get that rate cut. I'm not believing it just yet. I don't believe it. Now, this changed dramatically. This changed dramatically once we got our NFP numbers out Friday and they were fully digested. That's a big deal right there, 87.2%. So we are pretty much pricing in a rate cut, at least one in September. Now, what about October? We're thinking we're coming off a half point, 60-40. How about December? 3/4 of a point? Why? Why would all of a sudden we go in through an aggressive period of rate cuts? A couple of reasons. Odds of a recession. I just Googled this real quick. Your AI overview. These are down to 40%. Take a look at this one though. Deloitte & Touche, big accounting firm, predicted a recession in the fourth quarter of 2025 lasting until early 2027. Goldman Sachs estimated recession odds at 30%. The Conference Board doesn't it. Moody's right here. Look at that. You warns that the U.S. is on the precipice of a recession. So the idea is this. The powers that be, the big recession folks, the economists, they're saying that there's a good chance you're going to go into a recession by the end of the year. Now, I called it for last quarter. We didn't get it. I was completely wrong. Q2 GDP went up 3.2%. But take a look at this right here. This was a story that broke sort of a little bit earlier, about a day or so ago. But Goldman Sachs is already talking about the preliminary estimate of the benchmark revision to the 2025 March non-farm payrolls. Okay, they take these for about a year out. So April 2024 to March 2025. Then they revise down that benchmark rate. They're talking about revising that down by 550 to 950,000 jobs. So what does that mean? It means that the employment situation could be vastly different than what we think. And if that's the case, get ready for some fireworks. There's a tremendous amount of pressure right now to cut interest rates in the United States. The problem with doing that is your prices are still very much out of whack. The inflation's entrenched, and it's really hard to cut interest rates when you're trying to provide pricing stability. This is tough. I mean, this is a tough situation that we're going into. And what exactly does it all mean? It's really hard. It's difficult to really look into the crystal ball. I mean, if you look in years past, I know some of you have been here for years, in years past, like 2024, 2023, 2022, we had a pretty darn good look or beat on what monetary policy was going to be. We knew coming out of COVID, Once we went to 0%, we knew we were going to keep it at 0% for a while. Then you were going to see aggressive raising of interest rates to try to bring that money supply back into balance. We knew that was going to happen, and that was sort of the reason for your big long-term trend in the dollar yen. That was huge. A lot of the other assets sort of followed suit as well. And then we started to see the cutting. We thought we'd be a lot further down the line on the interest rate cuts by now. We haven't cut 5 times last September. We were looking at 5 rate cuts for 2025. You haven't seen one yet. This is very, very dangerous territory. Very dangerous territory. Nobody really knows what's going to happen with monetary policy here in the States. We believe there's going to be interest rate cuts, but I've heard that before. That chart, that 80-something percent, remember that early in the spring? We thought that June was going to be when we got the first rate cut. Didn't get it. So I don't know that I would bet a large sum of money at all that you're going to get a September rate cut. Now, what do we have here for U.S. oil? Let's take a look at U.S. oil, silver, and gold. We'll go ahead and then call it a day. Haymu, XAG. Let's take a look. All right, we got a few more questions in there. Sorry. Tina Jing just Googled it. It's 32 weeks. Sorry. Oh, no worries. There's no sorries. I appreciate the help. Thank you. Let's see. Hurst Horns, a Ninja Trader gives me excellent margin requirements. Yeah, I mean, they're pretty affordable if you're a futures trader. I'm not gonna stump for them though. I don't work for Ninja Trader, so but I have done business with them in the past, and they're quickly became the biggest in the United States. The platform order entry is pretty good. Analytics I don't particularly care for, but the order entry is about as easy as it gets. Let's see. I'm only 5 years of my trading journey, but it seems we really have made it as new traders in the game. You can't beat it. You can't beat that. If you're 5 years in and you're making money, what can you say? T. Marina, Shane, how many times, a wild-ass guesstimate, have you switched to newer and different brokers over the years, and what were your biggest reasons? Probably 10 or 12 brokers, I would say. For a while there, it was 1 or 2 a year. What were my biggest reasons? In futures, it was commissions. You tried to get the lowest commission structure you could. In the OTC markets, the Forex, and in the futures, fills. Fills really bothered me. My fills, there were some situations where I was pretty upset with my market access. I wasn't getting filled consistently, and I have to tell you, that's not a problem now. I mean, fills are not a problem. But back in the day, 2013, 2014, and trying to get filled was a real problem. And a lot of it's because the markets weren't as deep as they are now, no question about it. But I would say fills and commissions, Team Marina. That's why I changed, and I changed quite a bit. How many brokers have I broke up with? I had a nasty falling out with a couple of real estate brokers. A couple of nasty ones, that's for sure. Let's see, did that rate percentage go up? Yeah, as soon as the commissions, you get the commissions as low as you can, number one, and then you really monitor slippage. So if you're using limit orders and stuff and you're consistently not getting filled on your limit orders, you've got to figure out what's going on. Maybe you're just not getting in the queue. That's something, too, that you can make adjustments on. But if you're using automated trade strategies where your entry gets in and then it throws down a profit target and a stop loss at the same time, monitor your stop loss. Monitor your stop loss. Because typically it's a stop market order. And if you have a tremendous amount of slippage there, that's where you're getting crushed. All right, let's see. XAG, yeah, we're going to go ahead and go. You call for a recession to happen this year, though? Yeah, I missed, though. I thought we were going to get a negative GDP for Q2. Melinda was in the room, and she was angry at me and left, and she was right. I already issued that apology, T. Well, I'm sorry. My bad. That's my fault. Sorry about that. I wonder if those huge potential revisions are because of that labor guy who was just fired for cooking the numbers on the books. Yep. There were some major issues with those jobs numbers going back to the Biden administration. Last year was an election year. I harped on it all year long about those jobs numbers being cooked. There was no question about it. Does this bring on a recession now? I don't know. It doesn't feel like it. But we'll see. Yep, Melinda was heated. She was right, though. All right, here we go. U.S. oil. We're going U.S. oil, silver, and gold, and we'll call it a day. If there's any more markets you want to look at, go ahead and throw them in the live chat, and I'll be sure to get to them. We're just going to use Fibonacci's here to take a look at this, although I do want to look at gold on the 920 crossover. Relatively straightforward for me. We talked a lot about what this crude oil market typically what we thought this time of year. Fall seasonality, typically that brings sellers into the market. We're going to talk more about this concept on tomorrow's Switch Markets Live webinar because of the weekly inventory numbers will be out. But when we look at crude oil this time of year, we're in August. We're pricing September crude if we're not already pricing October crude, getting ready to roll. That's fall seasonality. So we're anticipating a downtick in the demand for refined energies such as gasoline, diesel, etc. And what you're seeing there is typically a falling crude oil prices. That's normal. This is interesting stuff here, though. A nice big sell-off. And what did you want to do? Do you want to buy it or sell it? There's a couple of things we can do. For me, if you're just going to look at the daily time frame, you go right there. There's your spike low. Or excuse me, spike high to a spike low, and if you get that pull back up around 67, that's probably a pretty solid sell. Now here's the one that nobody shows you, so I'm going to go ahead and show you the key levels, sort of the ones that, I mean, the fact that CNBC doesn't show these, or really for crude oil, I mean, they show crude oil charts every day, but the fact that they won't show you this level, Fox Business, Bloomberg, all of them, they did just ignore what the price of crude oil really was back in 2020. And it wasn't zero. It was about negative $40 a barrel. Why? Because there's too much supply and nowhere to put the oil. So they had to pay to try to store it. And you saw the quick bounce back. But this sell-off beneath zero, when crude oil went to negative 40, the damage there, I haven't seen the movies, I haven't seen the books written, but the damage that it did to mom and pop driller fracking firms here in the United States, especially over in the Bakken oil fields in North Dakota and South Dakota, some down in the Permian Basin in Texas, destroyed them. They couldn't do it. They couldn't deal with negative crude oil. It turned into a real catastrophe. All of a sudden, financing from operations gets pulled real quick, and you just get into a major meltdown. And then what did you see after that? Consolidation of the industry. And then the Hess came in and bought a tremendous amount of oil plays here in the United States, fracking plays. So what was it? Hess, Intercontinental, still a big one. But there was a lot of consolidation. I believe Chevron did a bunch of business there, buying wells. That's what happens when you see a major market meltdown, like a negative 40 a barrel. But still, nobody's showing us this level, 38% retracement. This is really where the battle's being fought, and it's getting ready to be fought again. So right there, right around 65, you can see we're cruising towards 65. I'd be looking at 64.50s. That level's not necessarily dialed in perfectly, but probably 64.50s is going to be a pretty good area maybe to step up and bid. So if you wanted to sell on that daily chart, you certainly could do that. A bid, though, probably a pretty good bid will be right around that 64.50 area. Probably be ready for that. Coming our way tomorrow afternoon on that EIA crude oil stocks report. That's at about 10:30 a.m. Eastern. Something right in here, though. You can see we're cruising right for it. Let's go right to 65 and mark it on our charts. So 65, and we want 64.50, somewhere maybe right down in there. I'd be really surprised if we don't get some significant support at that zone. Very surprised. Silver's this is one that we wanted to buy. We wanted to buy it bad. Right there at 35 and a quarter. Didn't get it. Now we're up at printing about 37.87. For me, it's all about big round numbers and key numbers in this situation. Love silver. Love it to the long. I mean, a lot of analysts out there make a great amount of sense saying that silver is going to $80. I don't know if that's the case, but there it is. I'm watching 40 closely. We already had some sellers step up at 39.52 last month. We talked about that. Got the big sell-off. Do we go up there again and check it out? I would be really surprised if we don't go up there and touch 40. So do we want to buy it right now? Boy, I wanted that pull back down to about 35 and a quarter. We just didn't quite get it. Let's go to our weekly. That was a pretty good level right there. Yeah, it's sort of tough to say. I mean, we could hold out and, sort of wait for our moving average, our 13-week moving average, 36, something like that. That could be pretty good as well. But for right this minute, probably just in a holding pattern, waiting for a test of 40 or a big pullback down to about 35 and a quarter, sort of in no man's land right now, right in the dead center of that range. Something to think about there if you're trading silver. Okay, here we go. Last one of the day. Let's go to gold. This is what we wanted to look at here. I didn't really want this on the 4-hour, though. Let's back up to the daily, and you can see what we're looking at here. We've got sort of a buy signal setting up. So if we do get a positive close today on gold, which is up about 0.25%, then we could be looking maybe to take that long. We've got several things going for this trade. I wouldn't really lean too much on the RSI here. I don't really believe you need it for confirmation on a daily chart. But something like this where you've got the crossover setting up, you're sort of trending. You're not really it's not a breakout trend per se, but you did get a reversal off of this sell signal back on the 30th of July. And right now, ever since we really turned the page to August, it's been bullish. Bullish, bullish, bullish. So I'm watching closely here. I think a test of 3,500 more than likely is coming our way. Why do you think the long side of gold would sort of be superior to maybe the short side right now? Listen, this is no accident. Coming out of that Fed meeting, we got the feeling that Jay Powell wasn't going to cut interest rates, not for you, not for me, not for nobody. And that all changed with the NFP report, and it changed for a couple of reasons. And the number one was the big miss to the downside and then the backward revisions. Since that non-farm payrolls report, they fired the Bureau of Labor Statistics manager. They've also, Trump running his mouth about the Bank of America and JP Morgan, that's not an accident. Suggesting that maybe Bessent, the Treasury Secretary, would be the first in line to be the new Fed chair, the new Fed, the head of the Fed. Just that suggestion tells you the type of pressure that they're putting on the Federal Reserve right now. They're pulling every string they can in the White House to get the rate cuts. I don't know if it's appropriate for the rate cuts to come. The pricing stability still hasn't been restored. But all that dovish mess leads to higher commodity prices, specifically higher gold. I would throw crude oil out right now. I wouldn't be looking bullish crude, not this time of year. And then also you've got the saber rattling between Russia and the United States. A lot going on there. We'll probably talk about that tomorrow as well if there's any new developments. But right here, you got that 920 EMA crossover setting up. So if you get a good positive close, that'll be your bullish candle. That would be your entry point right on today's close. Stop loss probably needs to be beneath this swing low. If you want to be really, really, really tight with it, you could put it beneath the trigger bar. I wouldn't do that. I would just adjust my leverage accordingly and give this one a little bit of room to breathe. But even on a 1-to-1 ratio, you still have to go up and test out that 3,500 level. So is this the time when we break high? Is this the beginning of the gold rally back up to 35 and maybe to 4,000? I think it could be. Now, that's an incredibly bold call, and it's tough to make calls like this, but it is possible. It is possible that that's it. As far as my own personal views on gold, I like gold. Everybody likes gold, right? Very flat, though. If you're interested in maybe a rising wedge, something like this, there's your rally there. So essentially it's an ascending wedge. A lot of folks will take issue with that. There's no reason to. Basically, it's just a big run and a rotate. Run, rotate. That's all an ascending wedge is. Something like this typically is a bullish market driver. It's a bullish signal. It's a bullish pattern. So we're looking for continuation. And if you're trading gold, put this number, put 3,500, write it down, mark it on your charts, put it in your will. That is where the war will be fought. It's just a question of when we fight it. To me, if we got that signal on the 920, I feel like it's going there. Gut feeling. Could be wrong, though. Definitely could be wrong. Okay, guys, I'm going to go ahead and sign off here. We got, okay, one more. Yes, sir. I know I came late. Did we already look at the dollar yen? No, we didn't. We looked at the euro yen, and I think we looked at the Great Britain pound yen. Dollar yen. Looks like we had a heck of a trade right there. This is why these levels, these macro levels are so important. This was a level that I outlined yesterday for you. 146.69. What's the monthly low? 146.62. What are we printing? 147.62. Let's just take this down to a 30-minute chart and see what happened. And there it is right there. Came across the board yesterday evening, right after that Tokyo Open, about 6 p.m. my time, 8 p.m. Eastern. Right down there, we went down, we hit that, and we've just sort of been accumulating. This is a vintage accumulation trade. We're sort of slow markets, and then you'll notice the volume just sort of stays even, and then you get the big runner, a little bit of volatility there on that U.S. session. Pretty darn good level. So if I was trading the yen, am I bullish or bearish? Probably a little bit bullish here just because we rejected that monthly 38% level, but I would still have my eyes on maybe 146.75-ish as being a potential entry to the long side. So don't really get shaken out of this market. Be careful with what you're doing because it is, there's a lot going on right now with the dollar. The yen, the dollar yen typically is one of our more sensitive pairs. So if you do hear a big tariff announcement one way or the other, you're probably going to get a big move out of this pair especially. Just be careful with what you're doing. Don't get too out. Don't get out over the front of your skis. You want to make sure that you take your time and do what you have to do to manage your risk properly. But one last thing that I would point out here: my monthly 13-month moving average, 148.37. That's a pretty big deal as well. Keep a close eye on that zone as maybe being topside resistance. That's pretty accurate right there, though. All right, guys. Let me see. Amy, thanks, Shane. Very valuable inputs. Yeah, absolutely. You're welcome. Coming up over the next 48 hours, BOE is going to be your headliner. Absolutely, Bobby. You're welcome. BOE is going to be your headliner. Tariff talk. Keep an eye on the Switzerland situation. I'm guessing that you're going to see an announcement anytime. I think they make Rolexes in Geneva, don't they? Or they make Rolex in Switzerland? I don't know. But somebody's going to want to take that 39% off of the watches. Could you imagine that, going down to spend $5,000 on a watch and get hit for another 40%? That's the end of that. Let me see. I'm not going to lie. I hope that bullish buy continues. Yeah, it certainly could be. BOE, Swiss trade negotiations. Those are going to be the two biggest market drivers for the next 36 hours. So be ready for that. As far as a market driver that may really shake things up, it's Russia, United States. A lot of saber rattling, a lot of threats flying back and forth. Pretty ugly stuff, really. That's the world we live in. That's for sure. All right, everybody, I'm going to sign off. Let's see, Catmandu, you're absolutely welcome. Dave F19, you're welcome. Lita, you're welcome. Bobby, my pleasure, guys. All right, I'm going to go ahead and sign off here. We'll be back tomorrow. Good to see everybody back. Tomorrow's going to be a Switch Markets How to Trade exclusive stream. So if you haven't already, head on over to Switch Markets TV, or excuse me, just Switch Markets on YouTube. It's not Switch Markets TV. Switch Markets on YouTube. We've got a new video out, just dropped today, on how to trade calm on YouTube. You can also check out my X. I believe it's posted there as well. And then we'll be live in the How to Trade trading room tomorrow and over on Switch Markets. We're going to do a little bit of a live webinar. We're going to do some live trading, maybe some tick scalping, and go over the news again, because it's very important that we stay up to date on all this stuff. Yeah, Team Marine, it's a Swiss brand. Rolex is a Swiss brand, isn't it? Shows you how many Rolexes I have, right? I have a Fitbit. I monitor my heart rate and my steps and my calories. I'm not wearing Rolexes. I got a Movado, though. That's a nice watch. All right, everybody. Have a fantastic trading day. Trade the action well. If you need anything at all, head on over to howtotrade.com. Register for your free account. Send me a private message. I'll get back to you in short order. And, of course, any comments, be sure to leave them on our videos online. And I typically answer those on a daily basis. All right, everybody, that's a wrap. Have a fantastic trading day, a better trading week, and a better trading year. Trade the action well, and we'll talk soon. See you.